You've seen the headlines lately: Iran, the Strait of Hormuz, oil tankers, and videos all over YouTube screaming about World War III. Look, let's just get this out of the way up front. A full-blown world war is not happening. The US military is the uncontested greatest military in the world. If this was a traditional fight, this would already be over. But here's the thing, and understanding this is really important for your money. Iran doesn't have to win. They have a weird advantage that has nothing to do with military might. So, let's break down what's actually happening in the Strait of Hormuz. Why oil is creeping towards $150 a barrel, and what does that mean for the global economy, your portfolio, and your wallet? Here's how most people talk about this conflict. He who must not be named. A boots-on-the-ground disaster. A long, drawn-out, expensive war. Look, those concerns are valid, but that's not the situation today. In military strategy, there's a common problem: preparing for the last war you fought. If you look at this like it's Iraq all over again, you'll miss what's actually happening. So, let's look at the real situation on the ground. America has already established military supremacy. Iran's conventional navy, mostly destroyed. They know they can't win that fight. Iranian missile stockpiles? The second they fire one off, we locate the source and eliminate it. Even underground silos aren't safe. So, they got smart. They changed tactics. Enter the Hornet swarm. These are small, high-speed attack boats. Cheap, fast, and they travel in swarms. We call them Hornets for a reason. One sting won't kill you, but it hurts like hell. They're not trying to sink a massive oil tanker. That's actually pretty hard. These boats are too small to deliver a kill shot. Instead, they aim for the soft spots. They fire rockets at the bridge. That's the control room where the crew steers the ship. Take that out, and the vessel is dead in the water. Or they target the cargo itself. Start a fire in the oil. Now you've got a burning tanker leaking crude into the strait. The goal isn't destruction, it's disruption. One boat with a rocket launcher can't sink a ship, but it can turn a $150 million tanker into a drifting, burning problem that nobody wants to sail near. And that's the whole point. The problem stopping global shipping is deeper than that, though. It's not just the risk of your ship being attacked. There's another huge cost: insurance. Think about it like this. You own a shipping company. You have a $150 million tanker full of $150 million of oil. You need to get it through the Strait of Hormuz. Even if the US Navy says, "We've got this, the water is secure," here's what the insurance company hears. There's a 5% chance a speedboat fires rockets at your ship. Just 5%. That's not high, right? But let's do the math. A 5% chance of losing a combined $300 million between the ship and oil? That's $15 million in expected loss, just for one trip. So the insurance company does what they always do. They raise the premium to cover that risk. Suddenly, it costs more to insure the trip than the trip is worth. So you don't sail. And here's the killer. It doesn't even have to be 5%. It can be 1%. It can be 0.5%. Because when you're talking about a $150 million asset that's not easily replaced, even a tiny chance of a total loss makes the math ugly fast. The US can control almost every inch of that water, but they can't guarantee that some guys in a speedboat with rocket launchers won't get lucky. And until they can, insurance premiums stay high, and ships stay parked. That's the invisible barrier. It's not missiles and destroyers blocking the strait. It's actuaries in an office tower in London. Now, let's bring this home, because if you're sitting in the US, you might be thinking, okay, how bad is this really for me? Well, America is actually in a decent spot. We produce our own oil. Not totally self-sufficient, but we're not begging at the pump the way some countries are. So, who actually gets squeezed? Let's start with Japan and South Korea. Japan gets 95% of its oil from the Middle East. Let that number sink in for a second. 95%. They don't have options. They don't have pipelines from Canada or oil fields in Texas. If the Strait of Hormuz gets blocked, Japan feels it instantly. Same with South Korea. Now, look at Europe. They were already in a tough spot before this conflict. High energy costs have been hammering them for years. Factories shutting down. Manufacturers are packing up and moving elsewhere. Economists have a fancy word for it: deindustrialization. But plain English, Europe's industrial base is slowly dying. And here's the thing: oil at $80 a barrel, Europe can limp along. It hurts, but they can manage. Oil at $100 a barrel, that's a different story. At $100 a barrel, the math breaks for a lot of European factories. They can't compete. They shut down. And oil is currently trading at over $100 a barrel. So now you've got two of the world's biggest economic regions, Asia and Europe, taking body blows. And here's where it comes back to you. When their economies slow down, they buy less stuff. Less stuff from China, less stuff from the US, less stuff from everywhere. That's the chain reaction. It starts with a speedboat in the strait. It ends with slower global growth. And slower global growth eventually finds its way into your portfolio. Okay, so that's the global picture. Asia struggles, Europe struggles. Growth slows. But what does that actually mean for the stock market? Because this isn't a geography lesson. I know, it's about your money. Well, there are obvious winners and losers. Energy stocks and defense contractors are clear winners. Oil goes up, they profit. Anything fuel dependent, airlines, cruise lines, shipping companies, trucking, these are going to be losers. That's pretty straightforward. But here's the part people miss. Oil isn't just gas. It's in everything. Plastics, fertilizer, chemicals, the stuff that grows our food and packages our deliveries. If oil stays high, everything gets more expensive. Groceries, Amazon deliveries, that new couch you've been eyeing, and yes, you'll feel this at the pump. Oil is literally what we turn into gasoline. So when oil pushes toward $150 a barrel, that extra $100, $200, $300 a month comes straight out of your pocket. Everything is about to get a lot more expensive. And here's the part that scares markets. As things get less affordable, consumers close their wallets. They buy less stuff, they take fewer trips, they delay big purchases. And that hits company profits, which then hits stock prices. This is why global markets are selling off so violently already. Personally, I've already started taking exposure off the table. So now the real question is, what's the off-ramp? How does this thing end? To answer that, you have to answer a different question first. Who flinches first? This is a game of chicken. Two sides barreling toward each other. Neither wants to look weak. But here's the problem. Iran doesn't need to fight the war. They just need to keep the threat alive. Iran's bet is simple. Hold the line. Keep the hornet swarm visible. Make sure every shipping company and insurance adjuster knows the risk is still there. And then they wait. Wait for the pressure to build. for oil to hit $150 a barrel and stay there, for European factories to start shutting down for real, for Japanese officials to start making desperate phone calls, and most importantly, wait for it to become a political problem for the Trump administration. Because here's the thing about a game of chicken. It's not about who's stronger, it's about who flinches first. Iran is betting that at some point, the political cost of this disruption becomes too high, that the White House starts feeling the heat, and when that happens, they push for a deal. Until then, Iran just needs to exist, just needs to be capable of causing problems. They don't need to sink ships, they just need to make the insurance guys nervous. And that nervousness, that uncertainty, that's what keeps oil at $150 a barrel. That's what keeps the pressure on. Europe can't handle $150 a barrel for oil for long. Maybe 3 months if the headlines are right. Maybe less. Iran knows this. They're watching the calendar just like we are. Meanwhile, the US has a game of cat and mouse to play. They have destroyed a lot of high-value Iranian assets. But they still haven't found a definitive solution for the high-speed attack boats. The political situation and the speedboats. That's what you need to watch. Until one side gets the upper hand, the game of chicken continues. So, let's recap the situation. Here's what's actually happening. The US military has control of the situation, but that's not enough. Not when a couple of guys in a speedboat with rocket launchers can make insurance premiums explode. Iran doesn't need to sink ships. They just need to be a threat. And right now, they're doing exactly that. The pressure points are Japan, South Korea, and Europe. They're the ones with no cushion. They're the ones who feel the pain of $150 a barrel for oil. And when their economies slow down, that ripple eventually reaches us. That's why the markets are selling off. Here's what I think you should watch. 3 things. First, oil prices. They're the canary in the coal mine. If they stay elevated, the pressure stays on. If they start creeping towards $200 a barrel, that's a whole different conversation. Second, the speedboat situation. If America can find a way to neutralize the threat of fast attack speedboats, then Iran loses its leverage. The stranglehold breaks. Third, the sell-off itself. Keep watching what's selling off. At some point, stocks will get cheaper than the conflict warrants. This won't last forever. That's when it's time to buy. Not yet, but eventually. Personally, I've already trimmed some risk. I want to have capital ready to take advantage of any further downside in the stock market. Here's the bottom line. This isn't World War III. It's something stranger. A staring contest where one side barely has to move to keep the other side stuck. Until the attack speed boat problem gets solved, the risk stays. Pay attention, don't panic. Things are about to get interesting. That's it for today, guys. If you found this helpful, hit like. And since you stuck around this long, join me on Discord. Link in the description. I really do want to talk to you. Thanks. Bye.